Welcome to Buy, Hold, Sell. My name's Matthew Kidman and we've got two of the best people in the business with us today. We've got Roger Montgomery from the Montgomery Fund and Don Williams from Platypus. Welcome, gentlemen.
Thank you.
We're going to talk thematics, and one of the big issues that the whole industry's grappled with over the last couple of weeks is the reporting season. And reporting season is a great point for investors because it gives them a snapshot of how the market's going and how the world's going. Rog, how did you see it?
I thought it was a mediocre reporting season. I thought most of the growth in earnings came from cost out. So that's obviously a lower quality form of earnings growth. The outlook statements generally weren't strong. To support, if you're a cynic, you'd say to support share prices, companies as a result, they increase their payout ratio. And if you're going to be more complimentary, you might say that they can't see things to reinvest in, so they increase their payout ratio for their dividends.
And people love dividends at the moment. So does that all mean exactly what we're hearing, that the economy is struggling?
Oh, the economy is most definitely struggling, and not just in Australia but around the world. China's slowing down. That's going to have a big impact, I think, on capital expenditure and confidence, and we're seeing that already in the ABS numbers. And as a result, I think the outlook might deteriorate even further.
Okay, Don, you were on a similar path. The results weren't fantastic. There wasn't too many bumper issues.
In an absolute sense, the results weren't that great, but the context was expectations were very low. But I think in terms of the way the market traded through reporting season, it was really about the rate cut that we had, just prior, and that's the reason the market was so strong, not necessarily the quality of the numbers. But I guess for us, we managed to avoid most of the major potholes, and it was a reasonable reporting season for our stocks at least. So,
not great growth in earnings. Does that stop the market going higher from here?
Well, no, I mean, the PE can expand up to 20. I mean, it's done that historically. I'm not suggesting that'll be the case, but yeah, the PEs can run ahead of earnings.
That's a PE for the market.
For the market, but at some point, the earnings have to come through to justify the multiple expansion.
Okay, well, let's talk individual stocks. Was there a standout for you over the last couple of weeks?
Yeah, the stock that I guess we were most pleased with was Domino's, which is a very highly rated stock, as everyone knows. But they came in line with the consensus numbers, but they upgraded the same store sales growth numbers, and they also upgraded the number of outlets that they're expecting to open in this fiscal year. So that's the main reason the stock went up 40%.
Up 40% on a big multiple. Can it go further from here?
On a 3-year view, yes, but it'd be realistic to expect it to go sideways for some time. Okay.
Rog, have you got a special out of reporting season?
I hope my high PE stock goes sideways for some time too, rather than down. Equally high PE and optimistic expectations, a company called Certex reported its 44th straight quarter of dosage sales volume growth. There's an upcoming trial result which will determine ultimately whether this business is going to be able to actually use Cerspheres in first-line setting rather than salvage setting for liver cancer.
Right.
It'll be a binary outcome though.
And?
Well, we're optimistic.
So what's the binary? Downside is?
Well, I think it'll actually be a range of good outcomes, but the most good outcome obviously has the best impact on its price. The least good outcome could still see the share price halve.
Okay, halve on the downside, upside potential if everything falls their way?
Gosh, if everything fell their way, the shares could be $90, $100 at some point, but they really have to have everything, all the ducks line up.
Okay, just on the market, you thought it wasn't a great reporting period.
No.
Can the market go higher from here despite that?
Yeah, it can. One of the interesting things to look at is the relationship between the nominal dividend yield of the market and inflation. Whenever the real dividend yield is 2.5% or greater, since 1984, that has triggered a rally in the market, or that has coincided with the beginning of a rally in the market. It first hit 2.5% in December, and the market since rallied 10%. It's still at 2.5% now, so the market could very well rally from here. Valuing businesses and valuing the market's not the same as predicting its direction.
Okay, so earnings growth not great, but the market can go higher. Thank you.